What's up traders, welcome to Failure to Displacement. In this video we're going to take a look at the London session this morning on EURUSD with these two rather complicated entries that I took. One bagging a 1.2R and the second a 2.3R. Not the greatest price action. We've got quite a lot of red folder news due later on in the day, which I think is muddying the waters. However, let's jump into the high time frame analysis now and see how we came up with both of these setups. So as always, we'll start our analysis off on the 15-minute chart just to see whereabouts we are in the high time frame price action. Using the session liquidity tracker, the link to the indicator is in the description below, so go check it out if you want to get your charts looking something like mine. These green lines are showing us untapped levels of liquidity. We can see just looking at this 15-minute price action that we are in very, very bearish market structure at the moment. So price is just dropping lower and lower. We had a pullback on Wednesday afternoon, price kind of consolidated. We have now continued the bearish move. We've taken out Wednesday's low. Yesterday, the drop began in the London session. New York continued lower, New York PM lower, and then into today's price action, our Asia session is now displacing below the New York PM session and also displacing below Wednesday's low. So currently at the low of the week, we've got no signs of pulling back at the moment. Looking at more local price action, the areas that I want to be taking interest in are these bearish fair value gaps that have been left. So because price is so bearish, I'm looking for continuations really. I don't want to be fading this move just yet. So I will be looking for reactions at these levels just to see how price reacts and if there's a possible continuation setup for us. So we've got a 15-minute fair value gap at this point. We have a higher 15-minute fair value gap that Asia put in up here, which was respected once. I'm going to take a look at the fib for the current daily range, which is from the Asia high here down to the low. And so funnily enough, our 50% of the range, so the daily equilibrium, is right in the center of this 15-minute fair value gap. So based on ICT's teachings, we have a discount is anything below 50%, and this is the area that you would be looking to buy. Anything above 50% is a premium, so this is where you're looking to sell. So obviously you want to sell high when price is in a premium, and you want to buy low, so buy something cheap when it's in a discount. So this is our transition point right on this fair value gap. So again, potentially we could look for a pullback here where the big money then will get back in to sells for a continuation lower. So that's the initial plan. Let's drop onto a lower time frame. See how price is going to react if we get back into this area. One thing to note this morning is that we do have red folder news dropping on the euro at 4 AM. I'm going to drop that on the chart so that we don't forget it. So 4 AM here we have red folder news. So I want to be avoiding getting into a trade 15 minutes either side of the news. Let's skip forward now and see how we get on. So London's opened. Our London session opens at 1 AM. The reason I'm looking at this from 1 AM is because this is the open of the new 4-hour candle. So with the 4-hour candle, we would expect again it to pull back potentially to create a top wick and then drive lower. So we're looking just to see how this plays out. I'm not interested in taking any trades in this area, so I'm going to want some reaction at one of my higher time frame points of interest, which is this point here. And we've just tapped that now, coming into 155. So consequently, we've got a new hourly candle opening at 2 AM. So I'm going to drop onto the 1-minute chart now and look for a potential entry. So I'm going to be dropping onto the 1-minute to see how price is developing as we're interacting with this fair value gap. I want to note where my breaker structure is going to be. So the breaker structure is this swing low here. We're tapping 50% and have respected 50% of that 15-minute fair value gap. Price has quickly gone into a premium and then rejected. Oh, really strong reaction as well, leaving a volume imbalance at that point. So this gap in price action, you expect candles to open and close at the same point with an overlap between candles. We've obviously had strong reaction where we've just got a volume imbalance now where there's been literally no price action in this area. That's the close of that candle to the open of this candle. We had no price action. I'm going to change that to yellow and we'll class that as a volume imbalance just so we can recall. So that is a good sign that we could be potentially entering into sells. We have created relative equal lows here for the break of structure. So we'll come back, tap the volume imbalance with the little doji candle. Deeper into that volume imbalance. I'm wanting some kind of confirmation here to go short. Perfect. So really strong volume coming in. That's 0205, so 5 past 2. And we've closed through this 1 minute fair value gap that was at this point as well. So that's just been closed through and been disrespected. So that again is a good sign that we're potentially entering into a sell program. We've left the volume imbalance. We have created a new break of structure and we are disrespecting bullish fair value gaps. We'll just check what other confirmations, confluences we've got here. So one thing that is catching my attention, one of my new favorite PD arrays is the breaker block. So these two consecutive down closed candles here that led to the high are now classed as a breaker block because they've been traded through. So we can see originally this would be essentially an order block. Price came up, it did respect this area for several candles until we then displaced below it. So similar to inverted fair value gaps, this is now a breaker block which will act as resistance. Originally you would expect it to act as support, which it was doing. It's now failed. This is potentially a resistance area should we come back up to there. So we've got several areas of confluence at this point. I'm going to pull a fib from the high to the low. So of this now new range, this new sell range that we've got, 50% of the range is actually inside that breaker block as well. We'll lower a little bit. We've left a large fair value gap. This fair value gap is also overlapping into the breaker block. So again, another great sign. So now that we've got this price delivery, I would be happy to take a short here, the entry of the breaker block. So it's not into a discount as such, but breaker blocks often don't require price to go into a discount. They can repel price as soon as they're touched. My stop loss is going to have to be above this high because we do have inefficiencies above us that have not been filled fully. So these could potentially need to, price could potentially need to come back, rebalance these inefficiencies before continuing lower. So I'm going to have to put my stop loss above the high. Because we do have news coming at 4 AM, I'm going to be quite aggressive with my take profits. So what's drawing my attention is these relative equal lows here. So this would be sell side liquidity and that would be my take profit one. Let's just see if we get tagged in here. So we continued lower. I'm just going to pull the fib down. Pull back now. So we're coming into 213, so we've got a new 15-minute candle opening soon. So hopefully this will be an injection of bearish volume to drive price lower. We're into the breaker block now. This is the new 15-minute candle just opening at 215. Let's take a look at how price reacts. It's not a strong reaction at the breaker block, which isn't great news. We did anticipate price may come back into this area, so that's why we've allowed for that in our stop loss. Okay, so price has respected the bottom of the 15-minute fair value gap. It has now fully closed the volume imbalance. And then we've had a big engulfing candle at 220, so that's a good sign. So just looking at this price action, we can see that the bearish candles, we've got one very large bearish candle here, another very large bearish candle at this point. The bearish candles are significantly bigger than the bullish candles, which is giving me hope. Okay, so we're back into drawdown. This is not good. So again, it's not the cleanest of price action. This could be given the fact that we've got news coming soon. And also later in the day, we've got Fed news, FOMC speakers on the US dollar as well. Not a great day for trading, to be honest with you. Red news at 10 AM. there's a lot of red news later on in the day. So this could potentially be affecting how price is reacting now. And so we're back into drawdown. Price has come up. It's respected this 50% of this 15-minute fair value gap, which is good. But again, worrying that we're back into such a deep discount. Okay, so we're back in the green. We've left a bearish fair value gap. Price is grinding lower. So in live time, when I took this trade live, I took 50% of my trade off as we tapped that sell side liquidity there. All of this drawdown freaked me out. I didn't like it, so I took 50% of the trade off there, and then I was going to close out in full if we come through this area. And I also, at this point, moved my stop loss to break even because I didn't want to go back into drawdown. So my trade management, my plan changed at this point, and that was mainly due to emotions getting the better of me because of all of this drawdown. So I took 50% off, pulled the stop loss to break even at this point. Price did eventually come down and take the sell side that I identified. I was out of the trade. So it was a small win. I wasn't particularly pleased with the way I managed that due to emotions. They did get the better of me, but that's how I managed that. Ultimately, the target would be to take out the daily low, which is what we were expecting. But I was out of the trade by this point. And we can see price comes a little bit lower. Again, grinding price action, not really clean. Retracement. Back into this 15-minute fair value gap. So this trade's over and done with for me. Now I am still monitoring. I'm monitoring for new entries and I'm monitoring the 4 AM candle. So we've come back into this 15-minute fair value gap that has held nicely. We now have a new session high here. So this pin hammer, I'm going to remove that fib that was put in, is actually now buy side liquidity. So this is the high of the session. So we wick through the high of the session, but we respect the 15-minute 50% of the fair value gap. Price again is respecting this 50% of the fair value gap. So this has got me interested in possibly re-entering depending on how price reacts. So we got a minor breaker structure here. So these two equal lows. Under normal circumstances, equal lows like this I wouldn't class as a break of structure, but it is there, so we'll take note of it. So we've got an internal breaker structure at that point. We've left a fair value gap. And again, this bearish candle is the most significant bearish candle leading to the new high. So I would class this as the breaker block again. So again, similar to this setup, we have a breaker. We've got a fair value gap in the breaker. So this is the now famous unicorn entry. We've swept the session high liquidity. So price has tapped the fair value gap that we have left there and the breaker. Keeping an eye on the timing now as we're coming. We've got a bullish bullish 1 minute fair value gap just below us. So we're just checking out how price is reacting to this. We've closed below the 50%. So in my analysis, when price is closing below or beyond the 50% mark of a fair value gap, it means it's less likely to hold. So this is a good sign that potentially we can get into a sell program. So I view this as bearish now because we have closed below the 50% of that fair value gap. Closed out the fair value gap completely, leaving this bearish fair value gap. So here then we have our breaker block, we have our fair value gap, this is our unicorn entry. We will pull a fib from the high to the low. 50% of this range is inside the breaker block. So again, the confluences are stacking up. The entry, exactly the same as this entry, would be a short position from the bottom of the breaker block. Stop loss would be above the high to be safe. Again, keeping in mind that this 15-minute fair value gap does look like it's holding price down at the moment. And then targets, going to be for the daily low is our ultimate target, but we do have this swing low here as sell side. So that would be take profit 1. And then take profit 2 would be closing out at the bottom of the day at the daily low. This is just sticking to the plan. Same setup again, breaker block, fair value gap after a break of structure. So my cutoff point is 345 for a trade. So I need to be in the trade before 345. So I will only take trades 15 minutes either side of a red news folder. If we're not in the trade before 345, which I will stick a line on, then the entry is invalid. We get tapped just at this point. So the bottom of the breaker block has been hit. 50% of the retracement level has been tapped. Price pulls back again a little bit deeper. We're into the new half-hour candle now. We've respected the 15-minute fair value gap yet again. Nice reaction. So big engulfment candle here. So we're looking to take profit 1 at this point, bearing in mind that we've got the news coming very, very soon. So we've got a fair value gap at this point, so we're going to be monitoring the 50% of this fair value gap. We're going to be wanting to see price respecting the 50%, otherwise we start getting concerned. So we're just above 50% at this point, back below the 50%. Price comes to take our take profit 1. So there's take profit 1 done. Just at the new 15-minute candle open as well, look. So 345, we get that bearish injection of volume to take out this sell side liquidity, and then ultimately we are targeting the sell side for the low of the day to bag a 2.3R, which is completed shortly after. There's 2 trades there, a 1.2 which was quite painful, and then a cleaner looking 2.3R. Neither were particularly great trades given the fact that we've got news on the cards. So I would say that this was a risky day to trade. However, this 15-minute fair value gap proved to be really, really powerful. So it did give us a couple of solid entries. Hope you found the analysis useful. If you did, please leave the video a thumbs up. If you have any questions, leave them in the comments section down below. And likewise, if you're enjoying the content and want to see more analysis like this, then consider subscribing. It'd be great to have you on board. Thanks for watching. I'll see you again in the next video.